So here we have Form W-4 found on the IRS.gov website. You can also get this form from your HR or payroll team. This form is normally filled out when you start a job. It's also filled out when your financial situation changes, normally when you go from the filing status of single to married, or if you're married and you want to come back and revisit this form because your financial situation has changed, or you want to go from the married status from a filing standpoint to a married but withhold at a higher rate on this form. So this form is used really to do the work to figure out exactly how much allowance to claim, and based on those allowance figures that you put on this form, it will determine how much tax is withheld from your paycheck, bi-weekly or weekly, depending on how you're paid. So in sections 1 through 4, it's personal information about yourself. So I'm going to go ahead and fill out blue elephant. Obviously this is a fake person, real entity but fake person. So okay, in section 3 you have the filing status. In this case we're just going to do single, make it simple. The third filing status there that says married but withhold at a higher single rate, you normally use this when you have dual income and you file your taxes married, filing jointly, and you want to withhold at a higher rate to ensure that you withhold enough tax. You file, or you pick this third section here. The married filing rates sometimes, based on dual income in particular, you oftentimes can catch yourself not withholding enough. So that third option was put on this form to ensure that you're going to claim married filing jointly as your status, but you're going to withhold tax as if you were single. And the single rates are actually higher than the married rates. So that's what that third married but withhold at a higher rate means. We'll finish off the personal information. Okay. Section 4 is you check that box if you have a difference in name on your social security card versus what's actually being shown here on this form. Rarely have I seen that apply, but if you have that situation, you absolutely can check that box. Section 5 here is the total allowances that you're going to claim. There's a worksheet down below on page 3 that's going to walk you through how to find that number here in row H. But for now, we're going to leave it blank until we come down to page 3 and calculate that allowance section. Section 6 here is if you want to withhold more from each paycheck, you can put a dollar amount. I normally only put something here for some of my clients if I have calculated their allowances and calculated that their tax liability is more than the allowances. It's a rare situation, but it does happen. It normally happens for people that are high earners and are married filing jointly, so it's the dual income effect. For the most part, if you're reading this and you're seeing this video, by calculating your allowances on page 3 and putting it in section 5, you should be sufficient to ensure that you've withheld enough tax. But in those cases that you don't, here you can put a number. If I put 50 bucks, sorry, let me actually put 50. If I put 50 bucks here, that's actually going to tell the IRS, on top of the withholdings that you're going to withhold based on the allowances I pick, also withhold an additional 50 bucks from each paycheck, or whatever number I put in this section. So that's what line item 6 is doing. Line item 7 is if you have certain exceptions, and the 2 exceptions right there you can see in the bullets, you would put exempt here. Most of my clients that I've helped fill out this form and also to do some tax planning for, they don't have this situation, so it's normally left blank. And then 8, 9, and 10 normally are filled out by the employer, so you're good to leave that blank. You have to make sure you sign this form though right above that and date it, but below that your employer is going to fill that out. So on to page 3, which is the meat and potatoes of this form, W-4. So it's a pretty self-explanatory form in the sense that you walk through steps A all the way through H. So here you'll see you enter 1 for yourself because you're worth 1 allowance. It's kind of what the IRS is saying in that. So you enter 1. Then based off of your filing status, you're going to enter another number. So in Part B, since we have chosen single up above here, Part B is not applicable to us, so it's going to be 0. If we were going to file married and filing jointly from a tax status standpoint in April, we'd put a 1 here. But for our situation specifically, it's going to be 0. Section C for us is 0. If you happen to be head of household, you'll put a 1 here. Then Section D for us, since we're filing single, we're going to put a 1 there as well. Section E is around the child tax credit. You can see the parameters there. The reality here is based on different income thresholds, you'll be able to claim the child tax credit or not. So for the simplicity of this video, we're going to put 0 as the entity Blue Elephant Financial Services. Imagine that's actually a person. But if you do have children and based on your income thresholds, there is an opportunity for you to claim more allowance based on this child tax credit. So for now, I'm going to put 0, but Section E will be dependent upon your circumstance, and you'll work with your circumstances to figure out exactly whether or not you should put a number here greater than 0. Section F is also if you have other dependents. In our situation, we're going to put 0, but in your situation, you may have to fill that out. Also note that based off of income thresholds, as you can see at 175, call it 176,000 single, 339 married filing jointly, you'd have to enter 0. And the thing to note about E and F is you've probably heard this term phasing out. Based on different levels of income, you get or you don't have things in your favor from an IRS standpoint. So for now, we're going to put 0, and for some of you guys that will also be 0, but it's important that if your situation does warrant a deeper look, you make sure that you put the right number there. If you have any other miscellaneous credits, which there's a worksheet that you can do to go figure out if you do, you'll put something here. Vast majority of you guys will have 0 there too as well. So then in line H, you sum up A through G. In this case, we've got 1 in A and 1 in D, so that's 2 for us. That allowance number, we then come back up here and put, and we are claiming 2 allowances as the person Blue Elephant. So everyone's situation might be slightly different. You may put 2, you may get 3. Just note that the way this form really works is the more allowances you claim in Section 5, the less tax that's going to be withheld from each of your paychecks. So increases in allowances lead to decreases in amount of tax withheld. That's the best and simplest way to explain what an allowance does. If you want to ensure that you are going to withhold the most amount of tax from every single paycheck, you would claim 0 allowances in Section 5, and you would put married but withhold at a single rate if you're married, and single if you're single in Section 3. The combination of those two things will ensure that you withhold the most amount of tax. Regardless, it's imperative though that you do take the time to work with a tax representative or a financial planning representative that can help you calculate what your true tax liability is, so that you do ensure that you withhold the correct amount, so that come April, you're not hit with the tax bill or hit with a huge refund. Really, if you do this thing right, you want to get to April with the smallest amount of tax bill or the smallest amount of refund known possible. So for more information on Form W-4 as well as other financial planning information, please visit my website at www.blueelephantfs.com. And thank you for tuning into this video, and hopefully we see you soon.